Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
So let's listen into this very interesting chat that Uday Mukherjee is having. Moody's has upgraded their rating on India last week. All eyes are now on S&P report expected soon. How will all this change the global eye on India? Uday Mukherjee caught up with Rana Gupta, Managing Director, Indian Equities of Manulife Asset Management. Began by asking him about the Indian market, his thoughts on fresh buying overtaking profits. Listen.
Valuations, in our view, is not that expensive. It's definitely not cheap, but it's not expensive either. Particularly considering that earning growth has come back this quarter. In our calculations, operating profit grew over 15%. We expect that trend to strengthen going forward. So our view is that with this kind of earning recovery coming, valuation is reasonable. And the case for fresh buying still exists, particularly in sectors that we mentioned. In terms of taking profits, we would rather avoid stocks where the valuation is expensive and the earning recovery is not there, which would typically be sectors like consumer staples, some consumer staples names, and the healthcare names. So it makes sense to take profit there. Some of the consumer staples particularly done quite well, and add to the sectors where we are bullish earning recoveries, add to those names.
You're not convinced that consumer staples will see decent volume growth going forward, because a couple of these companies seem to show some signs of some rekindling of volume growth in the current quarter. But you're saying the valuations are too expensive?
So consumer staples, so we are quite bullish on the entire, we are looking at a proper cyclical pickup of the economy as well, right? So even consumer staples will do well from where they are. But let's put that into context. Let's say they grow their volumes by 7, 8, 9% with some pricing 10, 12%. But because the input price is going up, there's possibility of margin flattening out or even coming off. So they grow the earning 13, 14, 15%. Now, for that, would you pay 35, 40 times multiple? We think there are better opportunities. There, the stocks will outperform to a greater extent.
You'd be more optimistic or constructive on, say, autos compared to consumer of FMCG?
One would be, but again, auto, we are definitely constructive, but the problem with the auto is, particularly the four-wheelers, there are not enough stocks listed in the market. There are only one or maybe 1.5 stocks listed in the market. So how do you play it? Although we're bullish on the theme, but place to play that in the markets are limited.
Let me go back to financials, because I just remembered last time when we spoke, you did speak about financialization of savings as an important theme.
Sure.
That's played out very well. I mean, from brokers, you've had some new insurance companies listing. What are your thoughts on some of the valuations that you find today, starting with insurance, where you have a few stocks to choose from?
Sure. So if you go back to, I think we met in March or April, and till now, that theme has played out, but we do think that life insurance stocks are perhaps there or lower, right? So we remain bullish on that theme, and because insurance stocks went up and they came back down because of supply issues, we remain bullish on that sector, life insurance sector. Turning to brokers, we do think that theme has now played out, because those stocks have rallied a lot from there, significantly from there. And although the markets will do well, as many of you would be aware that these brokers also get a lot of, a lot of value from the lending operations. And that lending operations could be under some sort of pressure because they are wholesale funded. So that's one of the reasons why we would now take profit on those broking names. Insurance, life insurance, still bullish.
We haven't spoken about IT so can you take a contrarian call and buy IT stocks now, or the case is not compelling enough yet?
So IT stocks have been lackluster for a very long time. But can we at this stage make a case for further deceleration in IT top line and bottom line margins? We cannot. So IT is one sector where, in terms of fundamentals, the bottoming out process has started. And we do see that there is support from the buyback and dividend and so on and so forth. So while we cannot, at this point, we cannot make a significant upside case for IT, at the same time, we cannot make a significant downside case for IT either.
But it's still a value call, not a growth call
correct.
yet.
Yes, absolutely. Coming to that. Now, when IT is providing you good dividends and cash, and the valuation support, again, for a value-based investor, it should look quite interesting. As far as, let's say, we are concerned, IT is a very large weight in the index. And when they reach some sort of that kind of valuation support, one have to look at it and perhaps think of reducing underweight, not go bullish overweight, but think of reducing underweight to some extent. Because IT stocks are truly now looking like reaching a bottom and making a comeback. So to that extent, if you were to compare IT and pharma, pharma is perhaps at a much earlier stage of bottoming out. IT is perhaps coming out of it.